back again, all you capitalist pigs. My name's Jason, and this is the Forex Market Preview. You know, we're getting ready to open up doing some stuff in China, and I was talking with a gentleman who actually brought the idea to me, and he said, you know, we're probably gonna have to change that opening tagline when we go into China because it probably wouldn't go over well over there. And I started laughing and I said, well, I get lots of emails. It doesn't go over very well now. But, you know, I continue to do it because I think it's funny, and it is kind of what it is, guys, is that's just a play on, you know, what people think that we do and who they think we are. You know, it's kind of an inside joke for any of us who are serious about trading, is that, you know, none of us are greedy capitalist pigs. We're just capitalists, and we just, you know, believe in free markets, and we believe in the right for a man to kind of set his own destiny and be in charge of his own life. But it was interesting that we're probably going to have to change it when we go into the Chinese market. But I'm very excited about that. Those of you, anybody watching this in China and who's part of this every week, you know, we're planning on having a lot of the course content translated into Chinese so that can be there, and we can begin to support people in a new world and under in a new language. So we're very excited. If this is the first time you're joining me, thank you so much. I really appreciate it. We're going to get to the charts here in just one second. I just wanted to let you know that, of course, if you by somehow measure found this site on your own, make sure that you sign up. And I'll send you this thing every single week in your email. That is according, of course, if you like it. If you don't like it, don't sign up for it. I don't want to send you anything that you're not interested in. But if you do like the content here, go ahead and sign up, and I'll send it to you every week. And I'm going to give you a really killer video on trading and the 3 most important things that you need to know before placing any trade. And then, of course, if you are one of the over 70,000 traders who receive this email and this training every single week, I want to welcome you guys back. I really appreciate you guys being here, and I'm going to get you guys some good content this week, and hopefully a couple of good trading ideas. We've got some stuff that's moving even now as we speak. So let me see. By the time this video goes to print, we may be through some of this stuff. But I want to talk with you guys specifically. I don't do this very often. This is going to be kind of a unique day because I don't go back in time very often and look at what we looked at last week. This is the Forex Market Preview. We're moving forward. We're not looking back. But I do want to bring up an important point here and just show you the value of these ratios and how you can play both trend and counter trend using these. Now, I had this discussion with syndicate members earlier this week, but it's important enough that I want to share it with the rest of you guys this week. In terms of New Zealand. Now, last week, New Zealand, we were watching the market move, and I was identifying this level up in here, and you can just see where, I'll just go through a little bit from last year, where you saw, or last week, where you saw the market on this tirade, up, 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 and then we kind of hit this churn where the market really didn't know what it wanted to do, and we put in kind of this baseline. Okay? Then finally, let me fatten it up so everybody can see it a little bit better. Because on the chart, when you guys get it, it's not going to look right, and you'll be like, I can't really see what he's saying. But you see, there's a shelf right here, and then what happens right here is the market breaks that shelf. Boom, we fall, and then we rally right back up into previous structure support. Previous structure support now becomes resistance. Then the market comes down, and it put in an initial bottom. Now, when we found the market last week, that's where we were at. We were rallying up here. We were up in this zone here, and I was saying this is a very good opportunity to look to short this market because previous structure support now has become resistance, and we've had a directional trend change. Look at what happened here as the market rallied. We had this very nice upward move, right? I mean, look at that trend line. Look how beautiful that trend line was as it just came up. And then what happened? We broke the trend line. Now, it took some time. Breaking the trend line wasn't the indicator that we wanted to use to denote a change in the trend, although that's what a lot of people will teach you. What we waited for was the break of the support level that had been put in when that trend line changed. And then once that happened, now we're looking for places to short. And you had a couple of different options here. You had, if you were a trained student, if you were a tactician, or a technical analyst, you would have known to short the market here. And I teach this, of course, to my clients. Then the market came down. We found support. We rallied back up. Second opportunity to short. This is where I called it last week. I said, guys, probably a pretty good situation here for shorting. And of course, what do we see? Boom. Boom, the market rolls over. Where does it roll over to? Right back down here against previous structure support. Support, becomes support. Well, I went out to the syndicate members and I said, you know what, guys, there's actually a trade in here. If you guys didn't see this, we'll use our harmonics. And you can see AB equals CD. We have a very nice pattern formation here. For those of you who are not real familiar with patterns, I'll just go ahead and draw an ugly version of it right here. This is an ABCD pattern. Okay, this leg of the move is equal to this leg of the move. Now, for those of you who are students of mine, bring in the Fibonacci retracement, swing high to swing low. What do we have? 382, but not a 618, so we have a Fibonacci failure pattern, or what I call a trend continuation trade. So there was an opportunity to get on board that if you had wanted to, but that wasn't the trade that we talked about. The trade that we talked about was the ABCD pattern coming in at previous structure support. And I said, guys, buying opportunity here. Now, when we initially sold, we were selling a trend continuation trade, weren't we? Because the trend here had been broken. We were now bearish. Market ran up into resistance, so we're selling into a bearish market. So we're with the trend on the way down. Now, as we came down into this support around 80.67, I told the traders, listen, guys, this is now a counter trend trade. So when we're counter trend trading, we've got to be very careful about our position. And I said, because, you know, counter trends don't rally. Very rarely do we see a counter trend trade that just all of a sudden comes into a support level and then just rallies right off of it into new structure highs. That's a trend reversal. And we don't see that nearly as often as we see very, very small, minute corrections. But doesn't mean it's not something that you can trade. And so I brought in my Fibonacci retracement here. Again, just using fibs and structure. And I said, look at this 382. Market comes down in this low level. I said 382 retracement. You see support. And if I actually draw in a line here, you see support, support. You see some minor support levels in here. And I said, if you're going to trade, go ahead and buy them up at 80.67. And you can look to sell at around, we said about 81.60, I think is what we ended up selling at. 81.60 or something like that. Somewhere in here. Yeah, we ended up selling somewhere in there. It was right up against that level because that was the base of the previous structure low. So I said there's about 100 pips in here of potential profit. And where is risk? I said risk is going to be right down here somewhere just below these lows. And the lows, of course, were not taken out. I could, the video from that I put out to the syndicate members, the lows were not taken out. So although we did get a spike down here, we didn't get taken out on our protective stops. And we hit our target at 80.61, so almost 100 pips in there. Then I gave traders another opportunity. I know I'm getting kind of sidetracked here, but this is important. I want you guys to understand this stuff. I gave them another opportunity. I said we could have another trend continuation trade here. There's an opportunity to short the market at this 382 after you hit your target. You could take a nice profit on the counter trend trade and then get with the trend at the 382 at structure to look for a press lower. Now, as of right now, that hasn't happened. So there are two scenarios that syndicate members are sitting on right now. You're either still short and you're behind in this position and you're looking for a stop above these swing highs here, which if I was trading this is what I would be doing. Or, you've been taken out on the trade for a small loss. Okay? So you had large winner from 82.50 down to 80.67. So almost a couple of hundred pips in there. Boom. Then you got 100 pips out of the rally. So 300, and then you're actually sitting sideways to slightly behind a small loss. So you had big winner, nice winner, little loser. Or big winner, small winner, and a little behind in the position. But that's the way we want to play this, guys. You don't have to, you can play both trend and counter trend as long as you understand a couple of things. You need to understand structure. You need to understand how to read a chart. Guys, if you're a technician, if you are calling yourself a technical analyst, if you're reading charts, and that's what you do. You're not looking at numbers coming out of Europe or Asia, but you're looking at the chart and trying to make a decision about when to buy and when to sell. You're a technician. And if you're a technician who cannot read a chart, you're in a very, very, very dark place. And a lot of you are like, yeah, you're right, I am in a dark place. But you've got to come through that. And the best way you can go through that is to spend a lot of time educating yourself on how to read a chart. Because as you'll see throughout the rest of this video, we do a lot on just doing structure, just based off structure analysis, and we bring in fibs to confirm. But as we watch this, once you know how to read the chart, Then it's just simply a matter of understanding where trend and counter trend is. But then it's about making a decision, understanding what your risk reward is. And I always say to my traders, I say, trading is really about two things. It's about probability. I don't have any idea whether the market's going to go up or down from here. All I know is the probability. I know at any given time if the market is more likely to go up or down from its current location. And I know that because I know how to read a chart. And then I also know if I take action, where my stop is going to go and where my target is going to go. I'll say that again. I know with a reasonably high degree of accuracy whether the market is going to go higher or lower from its current position. I know the probability. Is it more likely or less likely? And I know that from technical analysis. And I know when I place a trade where my stop has to go and where my targets are going to go. So I know three things before I enter any position. I know where I'm getting in. I know where I'm getting out. If I'm wrong, I know where I'm getting out if I'm right. And by doing that, now I've created a higher probability. So I'm taking a higher probability trade, either long or short, and I know what my risk-reward profile is. I know how much I'm risking to how much I'm taking home. And guys, that is an edge. For those of you who are looking for the edge in trading, many of you have heard this term before. Oh, you got to have an edge in trading. Guys, that's an edge. That's what they're talking about. By knowing whether or not the market is likely to go up or down, and knowing what your risk-reward profile is, you put yourself ahead of 99.9% of the traders out there. If you trade it consistently, you will be among the top 5% of traders in the world. I just got an email from a client of mine talking about this very subject and about how he feels like he's just rounded a corner. I've asked him if I can use it, and I hope he says yes, because I think it's so motivating to hear what he has to say and the changes that he's made in his trading and the changes those are having on his life. But you got to be able to do that. Let's take a look at pound dollar. Pound dollar, guys, for those of you who are new to technical analysis, putting in a head and shoulders pattern. It's actually right there right now. It's been putting in this head and shoulders pattern for a while. Okay. And we're right up against this structure level. We've had a very, very big rally here, but I'd wait for the close of this candle, 159s. If we don't break above this, the high water mark here, and even if we do, we've got another level right here at 159. So basically, guys, you're looking at, if I just draw this in here, say stops go somewhere in here. I'll calculate it later. I don't talk much about stops and targets in this video. I talk more about trading opportunities and let you guys do the stops and targets. But if we take a look at this and we say, well, all right, we're risking this much. All right. If we go ahead and short them right here. If we wait for the market and see if the market comes up into 59.60s, then we can shorten that risk up just a hair to something more like this. All right? It's up to you. But let's take the bigger of the two levels here. All right? So there's our risk. If we break lower here, where are we going? Well, there's a high probability here we're going right back down into previous structure support. And there is an even larger chance that a rollover here will mean that there has been a shift in trend, that this head and shoulders is going to pay off. And if we get underneath the shelf here, there's a pretty good chance we're going all the way back down here. Somewhere in here. 153.40s. So as you can see already, if we short them here, we have a 1, 2, about a 2.25 to 1 risk-reward profile. And again, probabilities. Is the market more likely to go up or down from here? Well, based on the pattern formation we're seeing, there is a higher likelihood, statistically, that the market will go lower rather than higher from here. And now I've looked at my risk-reward profile, know where my stops need to go, know where my initial targets need to go, and I've created for myself a 2-to-1 risk profile. Is this a good trade? Absolutely. Why not? And now you get out there. Now, does this mean that the market's going to roll over here? No, we could very well be wrong. I'm wrong all the time. But as I look back across my trading, what I know is if I have 2-to-1 risk profiles, even if I have 1.5-to-1 risk profiles, and I'm right 50% of the time, If I'm right half, I'm going to be good. The problem is a lot of traders don't realize that being right 50% of the time doesn't mean you make one, you lose one, you make one, you lose one. More often than not, it means you lose 5 in a row, then you have one winner, then you lose another 5 in a row. Then you have a string of 10 or 12 winners in a row. See, just because you're 50% accurate doesn't mean that those 50% come in evenly. And so what a lot of traders do is they'll go 5 losers, then a winner, then 5 more losers. They think, well, screw this. This system doesn't work. This methodology doesn't work. They haven't done any testing. They don't know long-term what the historical accuracy is of that model. They don't know what the maximum drawdown is or anything like that. Now, let's move on forward. We're looking at euro dollar. We've been talking about this for a while. I try and give you an update because a lot of people trade euro dollar. If we close above this level here, if we close above, let me just draw it in here. If we close above 32.90, this is a buy. I would buy this, okay? But I wouldn't buy it right there. If it closes right here at 33.08, I wouldn't buy it at 33.08. What I would wait for is a pullback into 32.74. Now look at where we're going if we break above here. We're going 34.75, more than likely, to that double top. So if we wait for this pullback into 32.74, then we've created for ourselves potential reward, previous lows. Let's give ourselves a little bit of room here on our stop. Here's our risk. 1, almost a 2-to-1 risk profile, about 1.8 to 1 risk profile. Valid trade? Absolutely. Anyway, so that's what I'm watching on the euro dollar. Again, if we close above here, then there is a high likelihood that this market is going to go higher. That is a a clear indication that the market wants to go higher. We're running on 20 minutes here, so I'm going to have to shut this down. I like to keep these videos to 20 minutes or so. Let me see one more thing here. Hang on, wait for it. Aussie dollar. This is a very broken pattern. It's not a very attractive one. But Aussie dollar ABCD pattern. This is technically a Gartley pattern, although not one that I would normally trade, and for those of you who are pro trader clients, you'll know why I wouldn't trade this. But there is an opportunity back up against resistance to look at this 886, 1618 around 160, or sorry, $1.06 to look to short. So keep an eye out on that as well. But that's going to do it, guys. I hope you found value out of this lesson. Again, or out of this, this Forex Market Preview. Again, if you haven't signed up, make sure you sign up because you're going to want the videos every week, and also you're going to want that training video that I'm put out. It's about 20 minutes of training video, and it's good stuff. It's really good stuff. I get lots of good comments and feedback from the training video that we put together. Questions, comments, concerns, you can email us, support@triplethreattrading.com. And for syndicate members, thank you so much again, and we'll have some more content out to you, Akil and I, later on. Oh, also live trading room, guys. If you guys wanted to see this thing done on lower time frames, day trading, off of strictly structure analysis, get in the live trading room. And it's dirt cheap to get in there and see what we do. So, till next time, guys, good luck and good trading. I'll talk to you soon.